Well, today we reported the Westpac Melbourne Institute Consumer Sentiment Index rose by 4%. It's now hit a 10-year high, and it's now 48% above the low that we saw in April. That has been a big factor in our thinking around our forecast for GDP. Late last week, Westpac revised up its growth forecast for 2020, 2021. For 2020, we revised our growth forecast up from -3 to -2%, and for 2021 from 2.8% to 4%. For 2022, we've slightly shaved that number from 3.5% to 3%. Those increases in growth are consistent with faster employment growth, and we now expect that the unemployment rate by the end of 2021 will be 6% rather than the previous estimate of 7%. And at the end of 2022, we expect the unemployment rate will be down to 5.2% rather than 6.3%. So today's numbers on sentiment have given us even more support for our optimistic view about growth in the Australian economy. Indeed, with these growth forecasts, we expect that the Australian economy will be back operating at the level it was operating at in late 2019 by the June quarter of 2021, and consumption will also be at around about that level. So why are we saying that we've got this strong lift in growth? It's all about the consumer. But could this benign story be totally unrolled by the China story? Let's think about the impact that China has on the Australian economy. Australia's exports are about 420 billion a year, and China explains about 150 billion Australian dollars of that. So around 35% of our exports go to China, by far our largest trading partner. But when you look into the makeup of those exports, you notice that around 70 billion is iron ore, around 20 billion is LNG, and 10 billion is gold and base metals. I would say that 100 billion of the 150 billion is very safe. We know that China needs the iron ore. In fact, our biggest competitor, Brazil, is having trouble with their production levels based on their issues around COVID. So the question mark will be around the other 50 billion. The biggest concern is around the 13 billion in agriculture. And of course there we've seen concerns around wine, cotton, barley, seafood, all of which represent about $1 billion in exports. And for instance, wine, 36% of our wine exports go to China, so a huge reliant upon that China market. We're now starting to hear concerns about beef and lamb. Total meat exports are around 3 billion. So we have to say that the whole of that agricultural profile has to look for other markets. But on the other hand, in terms of the overall macro story, we've seen the iron ore price lift to nearly $150 a tonne. Bear in mind the government in its budget was talking about $55 a tonne. And even back as far as June, it was around $80. So the value of our iron ore exports, which represent almost 50% of our total exports to China, is increasing very rapidly. So from a macroeconomic perspective, the overall impact on the Australian economy, whilst some shocks to certain sectors, particularly on the agricultural side, the huge offset will be this extraordinary rise in the price of iron ore and our major export commodity. So in summary, the outlook for the Australian economy next year is very positive. 4% growth, a fall in the unemployment rate to 6%, and further falls in 2022.